Good morning, traders. It's Thursday, November 4th. We're about an hour and a half before the open. I want to keep this short so that I can get the video out before the open. You can take advantage of the play. Let's take a look at yesterday's pick of the day. It was AMD. Video came out right about in here. You can see how the stock did move higher, but I'm not going to pat myself on the back for this one because everything rallied after the FOMC statement. Kind of curious situation because the Fed came out and said, listen, we see inflation as being more persistent than we had originally thought. They are going to start their taper. Everybody was pretty much figuring that that would happen. It's probably going to run its course in the next 6 months or so. That will set the tone for tightening. Now, most brokerage firms have been looking for no tightening through 2022. I know that was Goldman Sachs' stance. Based on the movement in bonds right now, that table has been moved up into 2022. So tightening is going to happen sooner than later. We're also seeing a lot of central banks around the world right now trying to hold off on tightening as much as they can, but inflationary pressures, price pressures are pushing bond yields higher. The market paves the way for central banks. It tells them when they need to hike rates. So we may be watching for that over the course of the next few weeks here. Take a look at TLT, see what it's doing. Then we'll take a look at the market. Then we'll find a stock for today. TLT, after the news, you can see how it sold off and how this long bearish engulfing candle finished below the 100-day moving average. I think it's going to challenge the 200-day moving average. So this is something we want to watch very, very carefully because interest rates will provide a stiff headwind for the market. So keep an eye on TLT. That is your roadmap. If it continues to slip and it gets below that 200-day moving average, I think that it's going to weigh on the market. Here's what I see happening in the market. This is a weekly chart. You can see this upward sloping trading channel. We're getting pretty close to the top end of this weekly chart, and that typically would also be resistance, and we would see the market roll over. Just like every time it touches, it pulls back, touches, pulls back. This also, from a technical standpoint, is providing a little bit of resistance. Let's go into a zoom out of the daily chart, and let's draw our upward sloping arrow here, or excuse me, upward sloping trend line. It's still early in the day. I'm still having my coffee. There's one line that comes up like this, which indicates lots of room for the market to run. This one comes in a little bit tighter, and it might indicate that we've got maybe a pathway to approximately 475 or so. 470 is where I'm looking at this resistance line coming into play. So go into the normal daily view. And let's put up our major moving averages so we can take a nice look at what's going on there. And you'll see that they are all way below current levels. Beautiful breakout here. Got these long green candles starting to form. This is pretty strong action compared to what we've seen before on those breakouts to a new high. Typically, these candles don't have this level of strength. We've got seasonality coming into play right now. Lots of buying into year end typically. So I think asset managers without many other attractive investment alternatives are plowing money into the market. Investors are doing the same thing, and you can see how the momentum upward is still very, very strong. Here's the problem though. Look at how light this volume is. So there's not a lot of stock offered right now. So any little bit of buying fuels this move higher. That is not a particularly strong pattern. You can see little rally in here, very, very light volume, and then you get your drop. So I'm not all in at this stage. I see a lot of weakness in China. Xi and Li, two premiers in China, have both come out this week and have said that they see a lot of danger in China as far as economic activity and a slowdown. We know that coronavirus is poking its ugly head there. They have more cases and outbreaks now than, uh, since the Wuhan outbreak. So in almost 2 years' time, it's starting to ramp back up. We also know that electricity is being rationed there. China accounts for 30% of the world's manufacturing, so we can expect more supply disruptions. not a particularly good backdrop. And then you add in the credit concerns that we have on their property, their real estate companies. China is also considering putting in a property tax for the first time. That is also going to weigh on property prices. So China to me is the real issue. I would watch their market. FXI is a symbol that you can track, and you can see how it's been relatively weak. We'll zoom out, and there you can see that steady downward sloping trend line. Second largest economy in the world, not to be discounted. So how does our market continue to move higher when we have that type of weakness in China? We'll see. Right now, I feel the market's getting a bit overheated. There are no values right now. The forward PE on the S&P 500 is trading at a level that we have not seen since the year 2000. Be careful. This is a tenuous rally, in my opinion. I still think that it's a market that you want to be more aggressive with on dips, but short term, day trading, short term swing trades, okay, into year end, yes, I think we've got 5 or 6 weeks of decent market price action. So I'm going to keep this brief. I'm just going to go into my favorite swing trading search, Pop Bull, and I'm going to click through some of these stocks. We'll resume the normal view here. And we'll start with the first one, UEC. You can see beautiful breakout to a new high. I like this stock. Looks like it's got excellent strength, big volume. Yes, I like that one, but it's not going to be my pick of the day. Very nice here, long green candle. Doji holding those gains. Now we break through that 100-day moving average. Downward sloping trend line breach to the upside. DNMR also looks good. Let's take a look at that longer term chart. It's got lots of upside potential. Very nice firm base here. 1, 2, 3 touches off of this base. Decent volume coming in. I think this stock has some room to run. You might also be able to sell some out of the money bullish put spreads keying off of that $12.50 level right in there. But with the stock currently trading, I believe around 19, you're not going to get much of anything for those bullish put spreads. So you'll have to wait for a pullback to get those off. This is a stock that has a nice little bit of momentum to it. So I like it. Not going to be my pick of the day though. THC. And here you can see Tenet Healthcare stock through this downward sloping trend line. Big bullish engulfing candle off the 100-day. Choppy action. I don't like it. KR. I do like this. There's a little mini head and shoulders formation, inverted head and shoulders. One shoulder, the head, the other shoulder. Your neckline comes into play almost at that 100-day moving average. Yesterday, KR, nice long green candle. You can see earnings on 12/3. Just hover over the E. That's the next earnings announcement date. So we've got a few options expirations. What I like about this, and this is going to be my pick of the day for swing traders, typically on a long green candle like this, today, Thursday, you're going to see a little bit of retracement. It may not last long, but if you have a order already placed, I would look to sell an out of the money bullish put spread keying off of that $41 level. So I would sell the 41 puts and I would buy the $40 puts, and I would look to get a credit of 20 cents for that spread on the notion that the 50-day is going to hold, the halfway point of this long green candle is going to hold, and the 100-day is going to hold. So we've got 1, 2, 3 levels of support, and you can go out the expiration before December 12th, and that spread is pretty close. You're going to need just a tiny little pullback in the stock to be able to get that done. I like that trade. We also are seeing inflation in food prices, so I think that going into the holiday season, Kroger is going to do fairly well. We've got that head and shoulders formation or the breakout through the neckline. So I'm not chasing stocks. This one has pulled back to a decent level. Food companies tend to be relatively stable as far as their earnings, and they are less vulnerable to market moves. In fact, typically a flight to safety play. If the market does pull back, these stocks typically do a little bit better. So I like this play. I think that it is going to fare well into the holiday season. Sell the 41 put, buy the 40 put, 20-cent credit. That is my trade of the day. We'll keep looking. Nike, excellent, really nice through this downward sloping trend line, holding that 100-day moving average, 50-day moving average. You can see it's in a stair-step process higher. I would not chase this stock. You need to have a pullback. You get a pullback, you can get long a stock like this and then use the upward sloping trend line as your stop out point. So if I click here, click here, click here, you can see the upward sloping trend line, a little bit of a pullback. Enter. You can buy some in the money calls or buy a call debit spread on the notion that it's going to challenge this all-time high. Use that upward sloping trend line as your stop. LNC, haven't had a chance to see how the earnings came out after the close. If it breaks through this horizontal resistance, it might have some legs, but choppy. I don't like that. Final one, LVS. Not really into this bottom fisher because it's got so much exposure to China. And I've already talked about how China's economy is struggling. Their official PMI has been in contraction territory the last 2 months. You've got Xi and Li talking about slower economic conditions. So I don't like this, even though the company might do well down the road. I don't like the current backdrop for it. So I would not be bottom fishing on this particular stock. That's all I've got for you today. Good luck with your trades. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.